out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Droid phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 28th day of July, 2017. So glad to have you with us today. Happy Friday. If nobody has wished you a happy Friday, let me be the very first guy. Now, Michael's got to do the planes, the trains, and the automobiles today. So normally we would dive right into the numbers from around the world, but since we can't do that, we'll just go to him and get a recap of everything that took place in the live training room this morning before he heads out. If you are returning, welcome back. If you're here for the first time, a special welcome to you. And also, I have a chart up at the moment of the S&P 500 E-mini Futures. Michael will be showing some charts in just a moment. If you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions, and in 30 seconds you'll be able to see the charts and access the chat box. Garrett Jones is going to be joining us at the top of the hour, 1 p.m. Eastern. He's had a lot going on in his life, and someone asked the other day, where the heck's Garrett been? And I thought, wow, That's a great question. So I called him and he told me, and as far as I know, he'll be here today, 1 p.m. Eastern. So be sure and stick around for that. If you've never met Garrett, in the live trading room, we look at everything under a microscope. This is a guy who looks at things through a telescope. So if you've never met Garrett, you don't want to miss that 1 p.m. Eastern today. Now, as far as seeing the charts and accessing the chat box, the other option you have is to go to youtube.com/CFRN. Once you get there, pretty simple stuff. All you got to do, upper left-hand corner, click Live. You'll see the charts live, and you'll have access to a chat box there as well. So we've pretty much covered all the bases and done our best to make it as simple for you as possible. So without any further ado, Michael, if you're ready, take it away.
Okay, I will just send this one email and then I will get it. I have it right here. Okay, now I can take it. There we go. Alright, minimize that. Open that. Go to this. And should be ready to go. Alright. Good afternoon, everyone. Today is Friday, the 28th day of July 2017. If you have not taken a free trial with us, go to the home page here at cfrn.net, and this banner is going to pop down at the very top here that says sign up for the CFRN Live Trading Room, 100% free trial. Use our indicators, learn our strategy. Click here. When you click there, it'll bring you to this page where we ask you for only your first name and your email address. Click on register now, and then we'll be sent a confirmation link. You'll be sent a confirmation link. Once you click that confirmation link, then the trial will be able to begin. Okay. Now, results today. If you're going to read the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. Today, on the 28th day of July, 3 ticks in soybeans, 2 ticks in the euro, 5 ticks in crude, and 5 ticks in gold. Got to 150 total. That's one contract, 2 hours. To get to the goal for the day, which was $100 a contract, it took us 96 minutes and 5 trades to get to $100 a contract. And there was a total of 8 opportunities that I took advantage of this morning. Gross on the month, 2,567. That's over 18 days, averaging 142 a day. That is gross. That is not net. Net numbers are over here. With an $8 commission, your net would be $1,207. With a $5 commission, your net would be $1,717. Okay. On the year now, 21,502. That's over 140 days, averaging 153 per day. Okay. So that is that. Now let me quickly go through everything else in here. In gold today, we had 3 opportunities that we took advantage of. This one here we missed. Then we got a break even on that one. We picked up 1 tick on this one, and 5 ticks on that one to put us. I'm sorry, 4 ticks on this one, put us at +5 on the day. During the break, there was a shorting opportunity right here that would have been a break even. Okay, the euro did do something with the euro, didn't we? Yeah, we did. This one opportunity right here, +2. We missed this one over here. And it looks like during the break, there really wasn't anything because the cycle was flipping around. Actually, there was, if you would have considered this trending right here, then you could have shorted off the BBC right there. And it looks like during the break, there really wasn't anything because the cycle was flipping. Okay, well, I got the ES up. We'll just take a look at that. There were 2 opportunities on the ES this morning. One was right here off the BBC, and one was right here below the trend line. Okay, this one gave about 2.5 points. This one gave about 3. Unusual day for the ES. Now, during the break, it looks like there was a bounce off the BBC right here that would have been a break-even trade. Okay. We did euro. Okay, crude oil. On the crude, started out here with a break-even. Okay, then we picked up 5 ticks right there. and we had one more break even here. During the break, there was a shorting opportunity off the BBC right here. That would have been a break even. Okay. And soybeans, we had just the one right here. We picked up 3 ticks on that. And there was another one right here that I didn't get filled on. During the break, there was a momentum here that didn't go anywhere. And that was it. Okay. So with that, I will go over this again. The spreadsheet one last time. I picked up 3 on soybeans, 2 on the euro, 5 on crude, 5 on gold. Get a total of 150 gross today. It took 96 minutes and 5 trades to get to 100, and we took a total of 8. On the month now, we're at 2567. That's over 18 days, averaging 142 per day. And on the year, 21,502 over 140 days, averaging 153 per day. That is 1 contract, 2 hours per day. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Over here to take a free trial, just go to the homepage at cfrn.net, and right up here at the top where it says click here, click there, and give us your first name, your email address, and register now. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link to get your free trial. Okay? And with that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking the nation's largest city park. I nailed it, didn't I?
Yeah, sure you did.
There it is. Okay, you have it.
All right, thanks. Have a great trip.
Okay, thank you. And the recap of the recap, if you want it,
Sure.
is 96 minutes, 5 trades, $100 a contract.
Good job.
All right, you have a great weekend too, Del. And good afternoon, Pete. And we'll see you all Monday. If I don't talk to you over the weekend.
Okie doke, guys. The chart that I have up right now, S&P 500 Emini Futures. Yesterday afternoon, we had a move that began, roughly 12:30. And it's actually one of the biggest moves we've seen in the S&P for quite some time. Our Concierge Trade Alert that we had emailed out Wednesday night said to consider selling 24.74 if you got the chance, and you did. Dropped $900 per contract. Okay, we never get out at the swing high or swing low because we trail our stop, and if you're trailing your stop, when it pops back up, it's going to take you out. Now, important prices in important areas are almost always tested. But the downside pressure was so great that we couldn't quite get all the way back up to 24.74. We got up to 24.73. So we missed getting a second trade by 5 ticks. Okay? But the one trade, that's a nice trade. So then what happens? We come down, we hit the weekly trading zone at 24.61.62. And then overnight off the London Open, we try to climb back up to the zone overhead at 69.70. We miss it by 5 ticks. We then come back down to the zone below at 61.62. Do an about face, run up to the zone at 24.69/70. Price gets rejected. Remember, it's always going to be one of 3 things: consolidation, rejection, or what we call a hot knife through butter. Back down to the zone at 61.62, and now we're just a couple ticks away from back up to the zone at 69.70. Keep in mind that these zones are published weekly. Every Monday morning, partners receive them in their inbox at 6:15 a.m. Eastern, before Wall Street even wakes up. Our partners have an opportunity to put these zones on their chart. Now, when price does this, okay, from 69 down to 62, that's a 7-point move. This was only 6 back up, 6 back down, 7 back up, 7 back down. 7 back up. Now, we may have not counted this 7 down here, or we may not have counted this 7 up here. We might not have even counted this 7 down here. So let's see. 1, 2, 3, 4, 5, 6, 7, almost 8. That's 56, but we didn't quite make it here, so they call it 50 points. 50 points since 1:30 yesterday afternoon. In a straight line, did we rally up 50 points? Did we rally down 50 points? Nope, just zone to zone to zone to zone to zone to zone and back up to the zone. Wow, that must be a once in a lifetime kind of a thing. No. If you Google CFRN weekly trading zones, you'll find a couple pages of articles, and at the top of the page you'll find images. Click that and you'll see charts going all the way back to December 14th of 2009, where price has done what? It's gone from zone to zone to zone to zone to zone to zone to zone, week after week, day after day, month after month, year after year. So a lot of the CFRN partners become partners simply to get their hands on the zones. They say, hey man, your indicators are cool, your methodology is cool, I love it, love it, love it. Been trading a long time, and with what I already know, I just trade the zones. I just, if I can get a move from zone, not all these, not 8 moves, just one, that gives me more points in a day than I ever got before, and I'm happy with that. And if they're happy, well, by golly, I'm sure happy. Let's take a look around the world and see what makes the world happy, if anything. Amazon missed their numbers, so the tech sector is weighing a little heavy today. Not a lot. The Dow currently is up 7 points. NASDAQ is down almost 11. S&P 500 is down 5. Russell 2000 is down 7. So here at home, everything's in the red with the exception of the Dow. Okay, the Dow is up almost 11 points. S&P is down 5. We know that by the end of the day, one of them will drag the other one. It's like a tug of war, okay? Because the Dow and the S&P will end up in the same place at the same time, as they do each and every day, okay? It's just the nature of the Dow and the S&P. Okay, all right, so mixed at home only because the Dow is green. Crude oil is up 67 cents, trading $49.71 last. Gold is up $8.30, trading $12.68.30 last. Gold inching ever closer, better knock on some wood, to that $1,300 mark. Will it make it? Only time will tell. Now, the color of the day in Europe is a bright red. The FTSE closed down 75 points. That's exactly 1%. The DAX closed down 49 points. It's almost half of 1%. And the CAC closed down 55 points. That's over 1%. Last but not least, in the Asian markets, the Nikkei down 119 points. That's over half of 1%. Shanghai up 4 points. Hang Seng down 151 points. That's over half of 1%. So the majority of the world is in the red. The only green out of Asia is Shanghai, 4 points. The only green out of Europe is nothing. And here in the U.S., we have the Dow up a little less than 10 points. Okay, the commodity basket, it's a nice shade of green. Crude oil is almost at $50. It's trading $49.72. Now this week, our highest weekly trading zone for crude, $49.55. So we've spiked above it. Will we come back down and close at or below $49.55? Again, only time will tell. We'll have to wait until the end of the session to know for sure. All right? Okay. Let's take a look at a couple of these headlines. By the way, in case you didn't know, there's way too much weed in California. That's right. Weed, pot, grass, ganja, smoke. California's marijuana producers are growing 8 times more than is needed for consumption, according to the LA Times. Growers would need to scale back, and it's going to be a painful process, according to the California Growers Association. That comment from Hezekiah Allen during a panel discussion at the Sacramento Press Club. The LA Times reported that a consultant in the audience estimated the pot glut, too much pot, at 12 times what's being consumed. In 1996, California became the first U.S. state to permit medicinal marijuana. Its residents voted in November to legalize the possession of 1 ounce of marijuana for recreational use. But it now faces a glut ahead of new regulations that ban exports from January 1. What? A consequence of the glut, Allen added, is that some growers on the black market will export their product to other states, which, by the way, is unlawful under federal law. Don't forget, marijuana is unlawful under federal law, thanks to, what was his name, Henry Anslinger? Yeah, I think that's him. Hey John, I see you logged in. I just don't see your microphone yet. As soon as you get that wired up, I'll open your mic up for you, okay? 7 states, including neighboring Nevada, Arkansas, and Massachusetts, legalized marijuana on Election Day last year. In all, 29 U.S. states have legalized marijuana in some form, according to governing.com. Nevada sold out of legal marijuana so quickly the government used a statement of emergency to bring in more weed. Oh, now if you grew up going to school at Ridgemont High the way I did, then you really do get the humor behind all of this. If you didn't go to if you didn't have any fast times at Ridgemont High, then you might just say, them darn hippies. It's gone a lot farther than that. Arizona. Now, we have some interesting laws here. We don't do daylight savings time. We can open carry a weapon. We can conceal carry a weapon without a permit. Many people don't know that. In fact, the people who license you to carry a concealed weapon, they really don't want you to know that you don't need a permit to carry a concealed weapon, because then that might damper their business. But the truth of the matter is, you don't. If you're of legal age, if you do not have a felony on your record, that's all you need. Now, that's our humor for the day, but there's some news out there right now that's just, boy, it's not funny at all. And in fact, there's a couple things in the news today that carry no humor with them, but one in particular I think we need to talk about, because if somebody doesn't do something about this, we're going to have a bigger problem than we have. We've just kind of been blowing this off like, you know, so what? Okay. Now remember, our president drew a line in the sand some time ago. He said, we'll have none of this. And by the way, John, I still can't see your microphone, so maybe you're just getting rebooted. The U.S. believes, and I think since this article was printed, it has been proven, the U.S. believes North Korea fired a missile shortly before midnight Japan time, which would have been 11 a.m. Eastern today, Friday. According to a defense official, I can confirm that we detected a launch of a ballistic missile from North Korea. According to Lieutenant Colonel Christopher Logan, we are assessing and we will have more information soon. The missile may have landed in Japan's exclusive economic zone, according to the Japanese public broadcaster NHK. Japan's chief cabinet secretary told Reuters that the missile flew for 45 minutes, longer than the 39-minute flight of the intercontinental ballistic missile that North Korea tested early this month. Such a long flight time suggests a tremendous range. For weeks, U.S. intelligence monitoring North Korean military sites had predicted there would be another missile test. Thursday marked the day of victory in the Great Fatherland Liberation War, a North Korean holiday celebrating the end of the Korean War on July 27, 1953. North Korea has a pattern of launching missiles on historically significant dates, like its July 4th debut of an ICBM. But the weather Thursday was poor, possibly preventing a launch, while North Korea demonstrated an intercontinental range. Questions remain as to the potential payload of its missiles, with experts questioning whether the Hwasong-14, that's what it's called, North Korea's demonstrated ICBM, could actually carry a nuclear warhead all the way to the U.S. mainland. Well, guess what? I don't want to wait and find out. Do you? I don't think any of us do. Do we? Okay, Scaramucci. Hold on for me 1 second, please. I'm going to have to grab this. Yeah, hi, John.
Hi there, how are you doing?
Good.
What time today?
Anytime. I'm just waiting for your mic to go
Okay.
to go red, and I'll bring you on.
I'm only running on half cylinders today because my computer's been running for since 2009, and it just packed up overnight. The power supply went, so I don't have all the resources, but I can still go through it on using the internet.
Okay. Okay, I sent you an email this morning. Did you get that? I'm sorry?
Who's asking you these questions?
All kinds of people.
Like what? Like when you say all kinds of people, what sort of people?
The people in the audience listening to the radio show. The people in the partners. The people.
About it, and I sort of kind of weird that nobody was kind of responding. But look, I told you a couple of months ago I was starting a new experiment. I deliberately didn't tell people what I was doing because I just wanted it to be that way. But I can tell you it's been unbelievable. I've never seen it. I mean, I'm telling you, it's great. I'm in the biggest winning streak of my life beyond anything ever. It's absolutely incredible. I mean, it's the biggest deal since I made 12,000% in 3 months. Plain and simple. And there's nobody on the planet who's ever done that.
Okay. Well, we just have to bring something to light. Otherwise, we're going to have problems from up above. So.
No, you won't have any problems because I've got
But I'm live. I'm live on the air right now. I got to go back on.
Okay, I'll tell you that later on. But,
Okay.
Look, if you really want to know what we did yesterday about your stock, we sold Amazon at 1082, and we shorted it, and it's this morning of 2008. So, how the heck did that happen?
They missed their earnings.
Yeah, well, I didn't know that at the time, but
Right.
the point is that Amazon started falling before their earnings, and we were short, and this is what happened. So it was,
I got a live audience. I have to go back to them.
okay, good.
Okay. All right, I'm back. My apologies. All right. So Scaramucci comes unglued. We're going to have to delve into that because here we go. Scaramucci unloads on Priebus and Steve Bannon in a vulgar, "They'll all be fired by me." Scaramucci is hinting at a massive White House purge, and paranoid schizophrenic Priebus is at the top of the list. Did he know his microphone was on? I think he did. Anthony Scaramucci promised a massive White House purge in an expletive-laden interview with The New Yorker, published Thursday. So, yes, he did know the microphone was on. Scaramucci, the recently appointed White House Communications Director, unloaded to New Yorker reporter Ryan Lizza about the White House Chief of Staff, Prince Rebus, saying he'll be asked to resign very shortly and promising that virtually everyone in the White House communications shop would all be fired by me. Scaramucci called Liza on Wednesday night because he was angered by a tweet from the reporter earlier in the day. The tweet cited a senior White House official who said Scaramucci was having dinner at the White House with President Donald Trump, First Lady, former Fox News executive Bill Shine, and Fox News host Sean Hannity. "Who leaked that to you?" Scaramucci asked. The reporter said he could not reveal the source. Scaramucci then promised to fire the whole White House communications staff. Just a little dinner party. All right. Reminder coming up at the top of the hour today, Garrett Jones, money manager, will be joining us. It's been a while. He's had a very hectic schedule, but we look forward to having him back with us. He'll have some great charts to share with you. Again, as we look at things in the morning in the live training room under a microscope, he has a tendency to look at things through a telescope. So, stay tuned for that. I'm going to open up John's mic right now, and he will join us. John, welcome to the show.
Hi there. How you doing?
I'm very good. Yourself?
Well, as I indicated earlier on to you, I've had a computer running for quite a few years now that has been delivering me incredible results that we've been promulgating on this show. I told you a couple of months ago I was starting a kind of an experiment a few months ago, 2 or 3 months ago now, and it has gone exceedingly well, possibly the best winning streak of my life. Awesome. In terms of what we're trying to do. And I fully intend to reveal all the details of this to everybody who's been asking about it, possibly this coming week. But I wanted to do a few things before that. I wanted to, listen, I wanted to make sure that what I'm doing was working as well as it was and was consistent, as it has been. And it has been pretty remarkable. I mean, look, I'll tell you, before the computer went down last night, the last thing I put out was to buy gold and silver, and look at where they are today. I mean, it just doesn't get any better than that. And also, I mean, buy metals, basically. I said buy the metals, the platinum, the palladium, the whole works. And as far as I can see, they're all up. I don't have my full screens up right now, but I'm just using a kind of an internet deal. So we're on a delayed deal, but as far as I can see, we've had a pretty good run in the metals. We have been, as you know, we've been listen, we've been singularly bullish. I mean, if people aren't getting the memo, I mean, I couldn't have said it more strongly. Several months ago, I said the grains are going to have a meteoric move to the upside. And it's coming, and I said be ready for it, and I said it on the show. I said, you know, it was 9:09 the day I said we've got an extraordinary bottom developing on the beans, and my advice was to go in and buy them, and they ran up to 10.44. We sold them up around the highs, 10.44, 10.43 actually. They came down all the way back down to 9.90. There was one night, it was a Thursday night, I think it was, and they were in a kind of a free fall, you know, like a falling knife. And I said, you know, I don't normally do this, but I'm going to go in and grab the falling knife. And it turned out to be the bottom. And we've gone up since then. But if you look at a chart of the beans, they kind of look like they've had a kind of a very large three-wave correction. And that is now breaking out to the upside. And that's what we basically said a few days ago we were expecting to happen. And look at corn. I mean, corn is back to the highs. Look at the oil today. Look at soybean oil. It's gone nuts. Soybeans themselves. And we had buy stops in on these before my system shut down last night. The wheat is a little bit underperforming. And the soy meal is a little bit of an enigma. It's a bit of a puzzle, actually, right now. But certainly the beans and the soybean oil in particular has been pretty incredible overnight. So the metals, and look, we've had a very, very good run in the softs. You know, we called a move on orange juice. We called that high, the first high. It dropped down to, actually went down to 129.5. I believe that's where we covered and reversed. We're always long and short. That's the beauty of this system. We are long and short all the time. Now, that's a very difficult thing to do, and I do it, to me, because it's a penalty I impose upon myself, because you can't just, you know, it's easy to sort of, you know, be a part-time buyer here and there and all the rest of it. Now, I know you do. You know, you are short, and you capture shorts, you know, just as easily as longs with what you do, and I commend you for that. But I'm always long or short, you know, with no, you know, there's no kind of let up or excuse. And I can tell you that it is very difficult because, you know, I have to catch the highs and lows of these markets. I have to always be on the right side of the market. That's what the discipline makes me do that. Mm-hmm. Listen, I've put out over 1 million alerts in the last 2 decades. Nobody's ever done anything like that. I have a sixth sense about markets. I know when they're going to turn, and you can take it or leave it. You know, you ask me to come on this show, I tell you the facts of what they are. You know, take them or leave them. But I know what I'm doing, and there's a lot of people following me, and they can vouch for what I say. You know, there's been people following me for years, and they're astounded by some of the calls that I make. We made an incredible call yesterday. We were basically we were long. Look, I went on this show. I not only put a target on Amazon at 1100, but I kind of told you how I was going to go there. Okay, and remember we were down at 930, or maybe somewhere in the low 900s or the mid 900s, in that last sort of panic sell-off when Nvidia went down to 140. Remember when we bought Nvidia back for the last run up to 169? We sold Nvidia up around 169 yesterday. Amazon actually surprised me a little bit yesterday by how rapidly it kind of went up into the earnings. Mm-hmm. I thought that was a good sign, but notwithstanding, look, I don't care how if some raging bull comes out on CNBC and says, you know, at 1082 that Amazon's going to 1100, that's probably going to make me sell the thing, you know, more than buy it. And I don't care. It's not what people say or what everything. The only thing that matters to me, and I think to you as well, you and I are kind of joined at the hip on this, is price. It's look, I let the market, just like you said, something that's frameable for everybody out there. And you said that we let the market tell us which way it's going to go, and that's a great way. It's a great way. It's a great way to trade, because look, when we were up at 592 yesterday, 592, 593 on the Nasdaq, it was very difficult because it actually went up to 596. And it was churning around, and I honestly thought initially, because it really was a pretty bullish day yesterday, but it wasn't Bastille Day. And the difference between, I mean, this is, other people may not be able to see this, but to me, I'm extremely sensitive to all the things going on in these markets all the time. And I said Bastille Day was probably the greatest trading day in history, because it was a day when all the indices suddenly went to new highs, including the transports, which is very rare. So we had like probably 10 major indices, certainly 6, if not 10 major indices, all hitting all-time record highs, on Bastille Day. And I said to you a day or two before Bastille Day, we were going to have a strong Bastille Day, remember? Mm-hmm. And you said, why is that going to happen? I said, it's just seasonally, it's a strong thing. Maybe because France is shut down on Bastille Day, right. Something happens in Europe, but it is the first look. This July was actually pretty tough to deal with, because I honestly thought we'd have a better performance going into July the 4th. We didn't. It was kind of down, and we didn't actually get going right away off the July 4th bottom. The next day, it kind of took, a little. I think the market actually went down a bit first, which kind of threw me for a bit of a loop, to be honest with you. But but we caught the bottom. That's the most important thing. Is no matter what happened, we got the bottom, and we rode it all the way up into Bastille Day. But I also know that when you get these synchronized things, the market's telling you it's going to go a lot higher. But guess what? We made new all-time highs yesterday in the Nasdaq. Here we are, 592 rather, 5992 area, 96. We're making new all-time highs, and the leader of the world, Google, is like down in the dumps. And that's incredibly bullish, because you sort of scratch your head and say, how can the Nasdaq be making new all-time highs and was up overnight when Google just got clobbered, pretty heavily? And that, it just shows you how strong the market is. And before this market tops out, a lot of crazy things like that are going to happen that tend to throw you for a bit of a loop. Now, the other big thing that happened yesterday was the transports crashed. I mean, they had their worst day since Brexit a year ago, a little bit over a year ago. And, as soon as that happens, the hairs on my back stood up, because, that gave me the clue that we might have some trouble yesterday. And the other clue, even though it took a while to unfold, was NVIDIA made a double top, 169, and started coming off slowly at first and then accelerating. Now, it didn't go into a tailspin like it did the previous time, because that guy, the Citron, maybe didn't come out and knock the heck out of it, but it still was down, and it accelerated down quite a bit. And so, Amazon and Facebook are leading the way. Netflix, which had been the leader for a couple of days, all of a sudden was selling off, and even Apple, which is also pretty strong the last few days, was selling off. I mean, I'm not even looking at the screen. I'm just telling you this from my memory. And I think I covered them all. So Google was, sitting there and actually making a spiky kind of a top, telling you I might be going down lower, which is exactly what happened. So for a while, the Nasdaq was sort of churning around in this 52, 56 area, and kept spiking up to the 56. I really thought we might, because Amazon was so strong and Facebook was so strong, I thought we might get a surge, and actually take out the 6,000. That was my initial thought. But then when the farmers started selling off, right, because of this healthcare disaster, the farmers sort of started getting a bad karma, and they were not performing like they were in the last few days. So we were basically selling everything in the morning as it was peaking out. And that's what we did. We just sold all. And I said, listen, I said, yes, this is not a day to be overexposed. Okay, definitely not a day to be overexposed in the market. It is a day to be selectively exposed only in uptrending stocks. I told the people to sell all downtrending stocks without exception. And by the time, I can't remember the timing was, but it was after as Amazon got up to 10, I think it got up to 1083. Listen, we put a stop on it at 1082, stop and reverse. We ended up shorting it at 82. We shorted the Facebook at 175, and then it all started to fall apart. And by that time, I just said, get out of all the stocks, get short all stocks. And obviously it was an incredible day from that standpoint, because it really, the market got hammered pretty hard. And we just literally just stood back and let it happen. And then there was a low came in when the NASDAQ was down nearly down 100 points. And we actually took a shot of that low. It rallied a little bit. And then we went short again. And I said, cover everything, cover and reverse all the stocks we've been following and all the indices, cover and reverse on the next sell-off, on the next low. And guess what? That turned out to be the bottom, and then we had a really good rally, and we selectively picked off some of the things off this rally, going into the close of yesterday, and overnight we made just when the market started selling off again after the close. We basically said, look, we don't want to be long until the morning and see how we go. And actually, we stayed short the NASDAQ all through the morning, even though my system was down. And I just put a buy stop in this morning to, right at the low, and it's rallied up, quite well since. So it's the market, I think yesterday was a bit of a shakeout. And there were a lot of reasons for it, including probably this, nervousness over the White House war that you just talked about. Mm-hmm. And so there were quite a number of components that created this situation yesterday. However, I think what could still happen is, Google will probably find a bottom here in this general area, and Amazon may in the next few days, and then you could have a bit of a rebound. And I think when those stocks start rebounding again with the rest of the market, that we're going to have another shot at the highs. But, we're running out of time on the bull clock, because, we're definitely starting to see, this window of selling we've talked about from July the 20th through August 21st, is taking its toll on quite a number of names. I mean, I've actually looked at a number of names that are down pretty sharply today from misses and things like that. And also the mid-cap, the mid-cap was the other warning sign yesterday. That tumbled early, and that kind of dragged the market down as well. So, there was plenty of, for those who are really tuned in to the markets, there were plenty of red flags appearing and given, and look, the market it's very hard, because when the NASDAQ is up and the S&P is, when the NASDAQ's actually screaming higher and the S&P is going down, it's a tough thing to reconcile and be able to pick precisely, and vice versa. Because what we had then yesterday was they were pushing up the Dow, and the NASDAQ started coming off. But when you've seen this a few times, you don't get fooled by it anymore, and you just follow each market according to which way they're going. And that's what you do with your system, which is why your system, I'm a great fan of your system, as you know. It's there in black and white. It's not an easy system to actually, look, it's easy to execute on. You just follow the rules. But on the other hand, when you sort of have to put those orders in blind, you know, in the middle of the night, you know, you know, that's why it's hard to make money in this business, because you have to do things that are very unconventional. You know, you have, you know, picking the bottoms and tops of stocks and you know, issues is a very, very tough business, because you have to do the opposite of what most people normally do. So we try and do that as best we can. And fortunately, we've done a very good job of it so far, and we hope to be able to continue to do that, because just like your system, we have disciplines. We have rules and we have disciplines, and if you stick with the rules, the rules will bail you out 95% of the time. There's always an odd time when the market's going to get the better of you, but you know, if you're winning, if your wins are up in the 90 percentile or higher, you know, you're not going to go far wrong. The most difficult thing with any account is to make sure that the first trade is a winner. You know, and once you get going and you're starting to make money out of the market, when you start using the market's money, it gives you the confidence to be more aggressive and take more risks, if you like, and step it up, you know, which is all the things that you do. I think, you know, you have a plan to step it up as you make more money, and that's a great way to go. But it's getting started and getting going that takes a bit of skill, and you have to make sure that you know, it's very important to get the first trade off and start winning right away, because if you don't, you know, the market psychologically can get the better of you. And, you know, if you make because you're sort of more prone to make mistakes. If you make 1, 2, or 3, and then you're afraid to go the 4th, and then you miss the 5th and things like that. So, you know, I am totally risk averse. I mean, I hate being on the wrong side of the market, and I avoid it like the plague. Okay. So that's the reason why all these guys on Wall Street have very, you know, mostly ordinary performances. And how do you know, we've been in a raging bull market since 2016, early 2016, and guys are losing money all over the map. I mean, you know, half of these hedge funds are shut down. This guy in England has lost half a fortune, from 25 billion down to 12. I mean, this ain't no easy game. You know, you can get lucky for a while, and then you know, you can get lucky for a while, and you can then you can literally get destroyed. But I don't, you know, the most important thing is consistency. You got to be an all-weather trader. You got to make money in all conditions, and you've got to be prepared for everything every day. And I've been doing this for a long time, and I have the experience of having put out an incredible number of alerts. And you know, after a while, you know how to. It's really avoiding trouble. You know, stalking the market, stalking the bottoms, trying to get. It's just, look, it's like getting on the train as it's leaving the station. I try to get on the move when it's already, you know, starting. When the train's just pulling out of the station, I want to try and hop on the train, so that I'm almost always in a profitable situation right away, so I can put in a stop and protect myself and basically have free exposure. That's what this is all about. It's all about being able to be in the market where you're not exposed to risk at any time. And that's what I try and do every day. So I hope I've explained it to a level where people can understand it.
Yeah, I think so.
So, I mean, in a way, your system is a momentum system, because usually when you catch a move during the night, you know, it's already on its way, and you're hopping on that train. You know, it might have pulled out of the station a bit more, but that's the theory of what you're doing, pretty much, right?
Well, I send out an email every night before 9 p.m. Eastern that has the areas that we're going to buy each market or sell each market, and then each person is able to take their own action as they see fit in whatever markets they're comfortable with.
Right. Well, my stuff, which will be available soon, is real time. It's real time. Everything we do is in real time, so there's no disputing it. It happens. It's as we see it. We do it as we see it. I might tell you that in the last few days, and I did it actually yesterday. I went through some charts the night before, and I actually put out some buys right on the open yesterday. And in particular, I thought the semiconductors were going to rally yesterday, so we decided to buy them right on the open, which turned out to be a very good trade, because that's what we did with NVIDIA and Xilinx and the semiconductor index itself. But as you know, they got up to a level where they ran out of gas, and and turned down rather sharply as a result. So, look, did it bother me? No. I mean, we ended up buying NVIDIA yesterday at a level where it went up, for $3 or $4 or so, and then it went down $9. But who cares? We were long for the $4 and short for the $9. And as I'll tell you something else, I have to, sometimes when I'm watching stuff, I can't, I might miss something, or I might not be able to get to it quick enough. And yesterday I put a buyout on 3 sort of reporting stocks, and 2 of them just performed fantastic. As a matter of fact, one was iRobot, which we bought right on the open, and it ran up from about 96 or 7 up to 100 and it went from the high 90s to about 104 or 105, something like that.
Yeah, that's the maker of the room, but they had news out that they are going to, or have been, without people's knowledge, sending information back to headquarters, which they're going to start selling that data, lay out people's houses. Yeah, I think they're probably going to wind up in a lawsuit over it.
Okay, well, that was one of them. And then there was NTRI Nutrition, that Nutrisystem, and we actually bought that a little bit too high, and it went down a bit, and then it rallied back up. We sold the rally, and we ended up making a huge amount of money on the short side. It was about $8 or $9 down on the short side of that stock. So, look, that's another thing, is if I actually do make a loss on a stock, I try to get that back real quick. That's just been a rule with me for a long, long time. You can't, if you make a mistake, you can't. Is that the NASDAQ there that you got?
This is the NQ right here.
Yeah, look at it. I mean, that's crazy. No, look, just logically, I mean, we covered and reversed on that this morning. When I heard the news of the healthcare failing last night, I figured the market was going to go down further. It did. We covered it at 9,855 this morning, and we're still actually long right now, but I would put a stop at probably 59.10 on this NASDAQ. And if it moves higher, I'd move the stop up. I mean, it's just, that's what I would do. So, because look, if it runs into trouble at that previous resistance rate, 5920, see that? And then it starts down, it's probably going to go down quite a bit. So if there's 2 outcomes of this NASDAQ that I would suggest are possible given what's happened. There is a possibility that if the NASDAQ gets, say, up to 59.30 or higher today, that come Sunday night, it might have a little bit of a dip on Sunday night. It might have a little bit, it could come back to 10 or maybe 5,900. And then if it were to turn up and starts going up next week, Sunday night, that's a favorite trick of the NASDAQ that's been going on for a long time, off these late in the week sell-offs, just for everybody's, just to tell you that. This time, I'm not so sure that will happen, but because if it turns down from here, we might have a more extended correction into next week. However, given the way these fangs in particular seem to just go down a certain amount and then recover, and given the possibility that we could still have a screaming up move into the 21st of August, I would be, I've still got a positive bias on this market in spite of what happened yesterday. So, I'm not, even though it doesn't look it looks more unlikely that we're going to, rally up on Sunday night. I wouldn't rule it out at all right now. And in fact, if we did rally up Sunday night and we sort of take back everything we lost yesterday, it would really actually make the NASDAQ look pretty bullish for the next up leg. So, but if it turns down from here, then it's going to, we'll just have to take it hour by hour or minute by minute, however you want to do it. But that's what we try and do every day. One thing that did go very well is just, I've got the softs up in front of me. The cocoa was, we had a buy stop in around 1920, and it's rallied back over 2000 pretty strongly. It kind of looks like it's going to go higher. The orange juice is rolling over a bit. The coffee still acts extremely well. Just look, it doesn't look like it's going to happen. There's going to be a frost, but just as soon as you say that, there'll probably be one. So I still want to try and stay long the coffee over the weekend and almost every night. As long as it's showing strength, I'd want to be long the coffee just in case there's some sort of an event which causes coffee prices to skyrocket, which could happen. Taking a look at the sugar is actually, looks like it's putting in a pretty big head and shoulders bottom here for the whole of July. And that sort of has a measured move that could take it up to 15 or so from here. So I think I'd be watching to buy another breakout on the sugar here pretty soon. Also, the cotton has been stirring. It's had a very jagged kind of a performance in the last few weeks. But if it were to take out today's highs or yesterday's highs and start pushing higher, I think the cotton could actually turn out to be a pretty good trade. And given the way the grains are going, the cotton sometimes goes in sync with them. So that's kind of oh, by the way, the energy sector is just going gangbusters, further to the discussion we had yesterday with Ed, which was certainly riveting to participate in. It looks like we're going to hit 50 on the crude next week. At this rate, this is a really, really strong weekly close, and it's almost inevitable that the energy sector is going higher. Even though natural gas is dropping down, which is normal, you often get the crude, heating oil and the gasoline going up and the natural gas is going down. I think the natural gas is a very interesting situation. Above 3,000, above $3, it might pull back down here. We have to sort of see how it plays out. But if it generates a buy signal, I would probably want to go long, because I looked at the numbers yesterday, and there was only a 17 billion draw, increase, in excess, if you like, surplus of natural gas, 17 billion cubic feet. I mean, I'm telling you, this summer is one of the lowest increases in cubic feet storage ever. What's been happening is in the last 2 or 3 winters, in spite of the fact that natural gas went down as much as it did, we've had incredible drawdowns in the winter, and we failed to make up those drawdowns in the summer with surpluses. And this year is almost, I forgot to mention this to Ed yesterday. I wanted to talk about it because it looks to me that if this continues and there's no big surpluses for the next few months, when the cold winter comes and you start losing $250 billion a week, 250 billion cubic feet per week in the natural gas, this year might be the year that natural gas breaks out to $4, $5, $6. And so that could be a really good trade and probably a pretty risk-free trade when it gets going later this and I think it's inevitable because this is I don't think we've had only one week. Maybe we had more than 100 billion cubic feet in surplus. I mean, you have to ask yourself, how come this last week was only 17 billion? Is it from air conditioning, or are they using more natural gas to generate electricity, or is it the trucking that's using the natural gas? It seems that natural gas usage is growing exponentially, and these surpluses that are normal in the summer are no longer normal. They're abnormally low. So this coming winter, if we get we get an the ice age type winter, plus abnormally high levels of drawdowns in natural gas, you're probably going to see something happen like what's just happened in the oil market over the last few weeks, but on a much larger scale. And actually, if we go up to $5 or $6 in natural gas, I mean, it's going to give the industry a huge boost, because a lot of these oil companies are losing money with oil. But if natural gas goes up to $6, it's going to bail out most of these companies because they're going to get a huge bonus from that. And obviously the natural gas stocks are going to be big beneficiaries of this as well.
True.
So look at the Nasdaq now. It's just starting to. It kind of looks like it's a sell here, actually. This Nasdaq.
Yeah, I would look for it to come back below 59.01 and then put in another rally.
Yeah. Anyhow, listen. Great to talk to you
Thanks,
again,
Sean.
Dwayne.
Appreciate it very much.
Have a great
talk
weekend.
to you Monday. Okay.
All the best. Bye bye.
All right. Bye bye. Okay, Garrett will be joining us here pretty shortly, unless something came up. And for now, let's take a look at the other headlines. That North Korea one. If that doesn't kind of keep you awake at night a little bit, have your pulse checked. Okay. Oh my goodness. Amazon's earnings report for the second quarter, as you know, shows the company fell short of Wall Street's expectations despite higher than expected revenue of $38 billion. Brad, when does White Bar come on? White Bar hasn't been on in, I don't know, probably a year, Brad? Are you talking about Jim? Is that who you're referring to? Yeah, Jim hasn't been with us in a long time. If that's who you're referring to, I don't know. Are you talking about when does the white bar appear on the chart? I don't use the white bars. So, anyway. Okay, despite higher than expected revenue of $38 billion, as opposed to the expected $37.2 billion, the firm's rapidly rising expenses brought its operating income down 51% from the same period last year to $628 million. Excuse me, guys. Let me put you on mute for just 1 second. Garrett, is that you?
Yeah.
Hey, buddy.
I'm here.
I didn't
Can you
know
hear
if
me
still
okay?
had- yeah, I hear you great. Fantastic.
Oh, good.
How you been, man? It's been forever.
Good. Yeah, it's been a busy time. I had thought about you and your audience on quite a few occasions, and we've had high school graduation and all the related events that happen, and then preparation for daughter going off to San Diego State University, and still preparing for that. Late this month, she'll go down there, and we'll go down as well again. So there'll be another few trips to get all that squared away, and then I've got to due for a trip to Boulder, Colorado for my older daughter, who's finished all that stuff long ago. And then my wife's father had been wrestling with, being ill and bedridden, and finally, passed on. So is out of the suffering thing. So I've had, in addition to being a pretty busy time anyhow, been lots of other stuff going on. So
Gotcha.
the stuff of life, huh?
Life's full of it, isn't it?
Yeah.
Tell you what.
Seems to be.
It
It
is.
just when you think it'll bring some stuff up every now and then. So but anyway, I got some charts and stuff for you. It's kind of an interesting it's one good thing. It's nice to know that we'll always have a bull market that we can relax with. So that's a good sign. That certainly looks like they've the government has given us a bull market forever. What do you think?
Do you really think it's going to go forever?
No, but I think that when that feeling starts to become, one of the things that I see happening here is that I'm in the midst of writing a observations issue, and it's titled .com 2 ? And it's kind of interesting because one of the things, as a matter of fact, if you want to come on my computer, I'm going to go to that chart. I can bounce around here. I'll go to that chart I'm referring to, which is the NASDAQ 100.
Yeah, let me push the charts over to you right now.
I don't have too many this time. I mean, I could have a ton of them, but just with respect to time today. Let's see. Show my screen. There we go.
Yep. All you got to do is grab it and go, and let me open it up. There we go. Beautiful. You can see it. .com
now,
bubble top.
Yeah. Now this is the NASDAQ 100, and this is, of course, the top early in the year 2000. Here, the market moved up from back here a little more than 5 years, 13 times. 13-fold move from about 350 or so up to 4,817, as I recall. Anyway, this is a 13-fold move. When the market came down here, from peak to trough, you had an 83.5% correction. So it's very interesting. At this point here, everybody knew that getting into a mania is a crazy thing, and very dangerous, and something that you should never do. But right here, just a couple of years earlier, everybody knew that anybody who wasn't in tech stocks was either brain dead or living in the dark ages. So, it's funny how the knowing. They knew that here. You wouldn't be able to talk anybody out of that. Oh no, this is a new economy. It's new. It's different this time. There's no question. If you're not, and Warren Buffett, he's not in the tech stocks. He's obviously lost his way and too old to be involved in a young business like this. And that was the thinking. And
yeah, the biggest one I really think was it's different this time.
Yeah, down around here, somehow we forgot the names of all these 29 and younger something people, And Warren Buffett somehow got a little bit more intelligent around here. I'll tell you what, though, in the first, but here's an interesting thing that this chart kind of shows. It shows what happened. At this point, people hated tech stocks. And during this rally from 2002 to 2007, you can see that you had kind of a nothing move here, really. In other words, you hadn't even corrected 50% of this move here. In fact, you'd almost be lucky to see if it was a 382 retracement into the peak in 2007. Now, the peak in 2007 was a higher peak in the S&P than 2000, and certainly higher in the Dow Jones. So they both made higher highs, but not here. At this time, people still were aware of the risk that was involved in doing this, and they weren't about to have any of it. And then not only that, after this market came down, this market again had another 80% correction from this move. I mean, it got hammered 83.5% here, and I'm just eyeballing this, but from this movement from here to here, this correction here brings you down to here. It looks like at least an 80% correction, so it gets it again, and then it starts this move in the 2009 bull market, and this one, of course, started in 2008. And what I've drawn in here is what I think the wave count would be from the 2002 low. I mean, it looks like a wave 1 move here, an ABC here, a wave 2 here or here, and then a run up here for a wave 3 at the 2015 top, and then an ABC and a wave 4, and we seem to be in wave 5. And look at this most external low trend line coming off the low and coming off the first meaningful low in 2011 and almost catching this low in 2012. That's clearly the meaningful lower trend line in this bull market on a monthly chart. And if you parallel that off the 2007 top, look where you are. So we've run right into that at this point in time.
Boy,
so
we sure have.
Yeah. So whether this is a wave 3, you could make an argument that this is a 1, 2, 1, 2, 3. Then maybe you get a 4, 5 to end this wave 3, and then you get a big ABC, and then you get and then you finish off your fifth wave. I mean, that's what it looks like here. However, it's hit the upper channel. So at the moment, it looks like we're probably due for a correction of probably at least 5%. I mean, we're overdue for a double-digit correction. We haven't had one since back here. And then you got to go back here to have another one.
What that big dip that you just pointed out there? When did that take? Yeah, when did that take place?
Well, this is the one going into the beginning of 2016. Okay. This is the 2015 dip after the all-time high, the first dip, and then it ran up, and then you had a drop into January, February of 2016. And then you ran up. Now, it's interesting. Here's the old high. And although you've come up above it, you haven't remained above it until January of 2017. So all this year, we're above those 2000 highs. So I'm kind of calling this the dot-com bubble too. Now, as big as this movement is, it's only half the movement that you see here percentage-wise. I mean, this goes from 1,000.
When you look at all the unicorn companies running around out in Silicon Valley right now, you would think that everybody forgot about what happened at the
I think they have.
bubble top.
Yeah, that's kind of the point of my argument is like, how long does it take to forget? Now, theoretically, this type of a top in 2000, you're not supposed to get it again in the same market cycle. I mean, in other words, you should have your correction. You should have your, I'm talking about an 80-year depression cycle. You shouldn't have this type of exuberance until the next big 80 plus year cycle. In other words, you should have your depression first. And maybe we will, because if you look at this move, obviously this move that we've had from the 2000 low or even the 2009 low is bigger than the move from here to here. I mean, it's already exceeded that move, and it's done it in 2/3 of the time. I did a thing on how many, I think this was 1,336 points. I've got another chart. I'll bring that on next time. That takes the amount of time from the 87 low to the 2000 top. That's the longest bull market in history. This is the second longest, but this has gone more points already. But the percentage here, this is 13 times from here to here. This is sixfold. This is at 1,000, and now it's at 6,000. So it's gone up 6 times, which is a big deal. And it's done it in, not all that many years. Although it took more years. I mean, we're looking at 7 to 8 years here where it did it in 5 years before. Both Fibonacci numbers, interestingly enough, but you still don't have the exuberance of that move in 2000, and it's not the same percentage move, but you're getting a pretty crazy, what's probably a 5th wave move here. I mean, this is surprising that it's done this. I mean, when you think in the last bull market you could only move from here to here, now you've got this kind of a move. It's kind of interesting. And by the way, that brings me to
that move is so hyperextended. I don't see how it can't make.
It really is, and I go back
at the top.
I got a couple things for your audience to share that I think are kind of worthwhile. This I've shown before in my observations, but this is a long-term history. Excuse me, of 10-year U.S. Treasury yields, and this only goes to about 2012. I couldn't find a more recent chart, but interest rates are lower than they've ever been.
Right.
And they've come from a point here where they're higher than they ever been. I mean, before, if you go back history-wise, you're not going to see interest rates much over 8%. Here's 8.7. Back in the depression of the 1780s, that's probably the highest. 10% was usury, but they removed the usury law. Isn't that interesting? And the banks did it because they're so honest. The banks went in to Congress and they said, hey, interest rates are much higher than 10% now, and we want to be able to pay our clients a higher interest rate. So you need to remove this usury thing. And the Congress, because they're so intelligent, or in reality as corrupt as the bankers, they help the bankers. They allow the bankers tell them what to do, and they make it law. So what they do is they remove the usury law of 10%, supposedly because the banks wanted to pay their customers more interest in a higher interest rate market. Now that's probably not true. It's like, are you kidding me? Are you, talk about insulting somebody's intelligence. What the banks, of course, wanted to do was to be able to charge more interest rates, charge rates above 10%. And lo and behold, remember when that happened? They had these credit cards. My dog, Wrigley, could have got a credit card. And they go ahead and they give it,
That's right.
Yeah. He hid it. He used to hide his credit cards under his food dish, So yeah, there they were, boy. I'd have to bust him, but no, I mean, no kidding.
Well, I mean, if you could, not too many years ago. Well, I guess it has been. It's been a decade ago, but if you could fog a mirror, you could get a mortgage.
Well, they
If
did
you,
what
if
they
you bagged
did.
groceries, if you bagged groceries at Safeway, you could buy a $500,000 home.
Hmm. And by the way, isn't that exactly what they did with the credit cards? Wasn't the credit card the canary in the gold mine, or the canary in the coal mine? Wasn't it the first shot over the bow? Let's see if America's been successfully dumbed down enough to do this. I mean, they wouldn't have done this in the 50s or the early 60s. They just wouldn't have, the people were more aware. But now we've had lots of time. By the way, there's a remarkable book I'm going to write about this time in my observations. But it's been around for a long time. A woman named Charlotte Iserbyt wrote a book called The Deliberate Dumbing Down of America. She worked in the Reagan she worked in the education department when Reagan was there, and she found out that literally this plan by the elite to dumb down America, and it was focused on in the education sector. I mean, I just went down to San Diego. My best friend from way back in the 4th grade lives down there, and I was trying to tell him about this stuff, about what's gone on, and how this has happened, and how things aren't what they appear to be. I mean, in other words, you and I have talked about it. Republicans and Democrats is basically for our entertainment, and while we get embroiled in whatever battles the Republicans and the Democrats are having, right. The elite go ahead and do whatever they want to do while we're looking in the other direction, and that's just been the way it's gone for a long time. And it's I also went back to that quote from Aldous Huxley that I use on occasion. That's isn't it interesting that a guy can make a quote in 1962, 55 years ago.
That's pretty amazing.
That is the most accurate description of today's world here in the United States that any socioeconomist has made in the last 55 years, including some that people that have written about it in the last 6 months. Some guy in 1962, when America was completely different than it is today, was able to very, very accurately say what would happen, and he said so that it would happen unequivocally.
Well, the only difference is back then they didn't have too much pot in California. That was the big headline today. California has too much pot.
Well, remember though, yeah, remember when he said it, they had next to zero,
right,
and
right. They had to bring up that dirt weed out of Mexico.
He said it. No, he said it 3 years before Mario Savio. So maybe some beatniks and guys in San Francisco, but other than that, it was
right.
slim to none, and it was very, very interesting, what he said, and these things have. Anyway, I was talking with my friend down there, and I said it was your industry. He's a retired teacher. And I said, it was your industry that they targeted. I mean, I said, listen, they targeted all of us. I said, this is a massive brainwashing campaign. They targeted all of us. They do it through subliminal messages on TV. They do food. I mean, you find somebody that's got 2 neurons that work that can tell me why fluoride is such a good thing to have in our drinking water. It doesn't do anything for your cavities. They've proven that.
Right.
It's a great rat poison.
Mm-hmm.
But it does nothing for your cavity.
It's still in our water, though.
Take a look at the history of how that happened. Somebody had a surplus of this stuff that they had to get rid of, and they said, "Oh well, why don't we just put it in the water?" And try to find the nutritious value of GMOs and what's happened with GMOs, and they've taken over. It's hard to find an independent farmer anymore. The government's taken them all over, and they're going to plant and give us GMO foods.
And Bill Gates is neck deep in all of that.
Absolutely, and he's also the guy who's neck deep in the seed vault over in Norway.
I heard about that seed vault a couple days ago on NPR. I think it's on Fresh Air. That was the segment. But
yeah, I mean,
if you haven't heard that particular segment, it's pretty illuminating. Just go to npr.org and just go and search on their site Seed Vault. You'll find the interview.
Oh, it's old news too, and the Seed Vault. I mean, I've known about that for, for a long time. And yet, what has he done? He's gone and got all the healthy, quality seeds for planting, nutritious food, and locked all those up in a big vault over there for. So there's our government. It's very interesting. Russia, that horrible place. They've got bunkers and underground things for their people in the event of a nuclear or other type of disaster, where they have food and things to take care of large segments of the population. We have FEMA camps where our people will be sent to, and the FEMA camp is an exact duplicate. If you want to find the blueprint for it, take a look at the Nazi camps. Exactly the same thing. But people won't believe that. I went down and I was telling my friend, again, we go back to the 4th grade, and I said, your industry was targeted. He said, where do you get all this information? It's not in the news. I said, well, of course it's not in the news.
Take a look at the first season of Fear the Walking Dead. That's what a FEMA camp's going to look like.
Yeah. It's just, they tell us in strange ways, but it's absolutely amazing. He said, well, it's not in the news. I said, are you paying attention? I said, all sorts of stuff that should be in the news and used to be in the news is no longer in the news. The news is now handpicked on what they'll put in there. And if you look at CNN, and by the way, CNN is the only, I believe it's the only news station that's broadcast worldwide. So the rest of the world looks at CNN to see what's going on in America, which is, of course.
When I was in Paris, that was the only news I could get.
Yeah, I think that's what, and it's terrible that they do that. I mean, when you have somebody that now shows, that they're not giving the news. They're giving their version of the news that they want you to have. I asked him, I said, have you ever heard of Pizzagate? He said, no, what's that? Have you heard of, the exposed emails? No. I said, of course not. I said, the news that you watch, they don't show that. I said, if you want news nowadays, you've really got to dig. But it's there. It's readily available thanks to the internet.
Yep.
And it's amazing. And he started to get mad at me when he says, I'm not brainwashed. I said, how would you know? I said, if you're truly, I said, how would you know? I said, go to the insane asylum and ask if any of the people there are insane. I'm not insane. You're insane. I said,
the only
you
sane
gotta.
guy is the one that says I'm crazy as a bed bug.
I said, we've all been brainwashed. It's just a matter of to what degree has it stuck with people and have people looked at it. But that deliberate dumbing down of America will tell you right away what they've done, and there's all sorts of evidence. But people, that quote from Huxley is so good. Let me see if I can find. I was going to do this newsletter. This is just.
So what do you think these interest rates are headed from here?
Well,
I don't know. One would say obviously they can only go up from here, but how much longer can they stay this low? As long as they want them to?
I think you have a systemic breakdown, or if we get real lucky, which I'm kind of hoping for, that we get some kind of a situation where we have a new, we're replaced with a new system. That's what I think. With a little luck, we'll have a systemic banking failure and a new system, such as after Bretton Woods, for example. You'll have a currency with a little luck. See, what the New World Order wants, and if Hillary Clinton were in there, when you'd have a breakdown in Europe first, followed by a breakdown in probably Japan and then the United States, and then they'd come out with the one world currency and New World Order, and done deal. Now,
where are you at on this whole cryptocurrency craze?
You know what? The honest answer to that is I don't have enough. What people should say a lot more is it's not my area of expertise. I don't know enough about it to give an opinion that would be of any value to anybody, which is exactly what I say when people ask me what I know about needlepoint. But it's amazing. You can go out to people who have zero knowledge on anything and have got wildly emotionally charged, strong opinions. How about that?
Yeah. Well, I mean, people ask me, what do you think about this this Bitcoin? I go, well, I brought it to my radio audience at $2 a coin. They go, wow, what's it at now? I say $2,500 a coin, and they go, oh my God, how much did you make? And I say, not a stinking dime, not a dime. That's the truth of the matter.
It's a thing I saw. It's very hard for me to. It depends on who wins. In other words, we've got, in my view, we're looking at and right in the middle of the classic battle of good versus evil, on just about any level you want to take it. You've got good people now who have done their homework, and it's pretty easy to find out. I mean, in other words, don't make this something about personalities. Well, gee, I liked Bernie better than Hillary, or I don't like Trump. He doesn't, I don't like some of the things he says. Who cares what you like? The bottom line is one party who happens to be the president is for the Constitution, and the other is for the New World Order. Mm-hmm. And you need to be very, very afraid, because Bernie Sanders, who may be a nice little old man, is a guy who didn't think he should get a job until well after 40, number one, so he's a real socialist, and the guy is a socialist. So the most popular candidate, frankly, was Bernie Sanders.
He never had a job until he was 40? I didn't know that.
I don't believe the guy, I think the guy, lived with mom and didn't do anything for a long, long time. And then found out, hey.
Tell me he lived in the basement and played video games.
Well, check it out. It's all, this stuff is available, but I don't think he would have, I think like Obama, I don't think he would have overwhelmed you with his resume. I mean, it's amazing that you can have a president who's never really had a job in Obama. I mean, and he really didn't. I mean, when you put, whether like my friend, I mean, he was really into Obama. I said, good. I said, you think he's into you? I said, think he cares about you? I said, tell me, you've been on this planet for in your 7th decade, and you fall for a goofy smile? Really? I said, here's your old friend from the 4th grade who's taken the other side, and you're gonna jump on. I've been there for you. He hasn't. But anyway, common sense doesn't go very far anymore. It's not. Common sense is not something that's easily found, and that's what happens when you have this. And believe me, I have people that are, literally Harvard. And of course, I was going to say Harvard educated, that don't buy into this, and they think, oh gosh, there's no way that you could have this kind of a conspiracy that would happen. I said, really? I said, are you aware of any empire in the history of this planet that hasn't had a conspiracy as it peaked and after the peak? I mean, E2 Brute was not about conspiracy? Really?
You can't even trade common sense for magic beans these days.
Exactly. By the way, here's a chart that I wanted to share that I'm trying to look at a picture and see if a picture is worth 1,000 words. Boy, I can't get this to stay where I want it to stay.
That's good.
Anyway, this is New York Stock Exchange investor credit and the market. So here's above this zero line here, people have positive credit balances, investors have negative credit balances. And that means, on margin, you're on margin. Well, here the market's going up, I'm going to be on margin. I'm going to be on margin. I'm going to have a lot, you got real negative credit balance here in the market tops. And now it starts to collapse and not very long after the collapse, those balances start to get positive. You know why? Because the brokerage firms ain't going to lose money, pal. Mm-hmm. They're gonna call you on your margin right now.
Yep.
Excuse me. As a matter of fact, the And the commodity houses are quicker than that.
God,
They
look
give
at
you
the far right side of that chart. That is just
well,
scary.
I mean, they'll give you 1 day, right? And then you got to come in. So they'll close out of those. So you get these positive balances in a hurry. But look at this. Market comes down and say, okay, well, we're going to get bullish again. Now we run up here. Now, by the way, this is the S&P, which is what I was saying. Here, you've got a higher high. Remember in the prior chart, we were down here in 2007.
Right.
So now you get this. Now you get this monumental lower low, and you're building this megaphone pattern. See, but look at the debt. Here you have huge cash balances, right? Because everybody's coming out of the market. Everybody, by the way, they weren't in any tech stocks, were they? This time they're in blue chip stocks. They're in the Dow. They're in the S&P. So now you got some cash balances. And, you know, and people are losing their homes and stuff like that. So, you know, you get this situation. And again, even in the credit balances, you're getting this megaphone thing, not only in the market, but in the credit balances. And look what's happened now. Here you go to horrible deep debt, and look at it now. Now it's like, what, this was like, what, 130 billion over here, and where are we now? 250. Almost a doubling of where it was in 2000. This is far more significant than whether the market's gone up 6 times or 13 times. This is really significant because this is just an enormous amount of credit out there, and look where you are up here, way above here. So it's, I mean, it's just remarkable when you look at this and you're thinking, why in the world is anybody in the market? In other words, and by the way,
if that doesn't concern you, you should check your pulse.
Oh, I mean, and again, and they go, well, gee, maybe I should move into something safe like bonds. I go, yeah, there's an idea.
Or the dollar.
Why don't you move into bonds? Because here you're going to be able to get nothing for your investment. This is about bonds. You're going to get literally pretty much next to nothing. But the bond price, because interest rates are so low, is going to be extremely high. So you're going to pay more than you've ever paid in history, literally, more than you've ever paid in history for bonds. They're going to mature at less than what you pay for them by far, and nobody's going to pay you a damn thing for your risk. Yeah, that's a good idea. Anybody who tries to sell you bonds got to be, you know, what is it? It's somebody following human nature. Well, why are you selling them bonds? Well, that's what we always do. The stock market doesn't look good, you go into bonds, right?
Pete from the audience says, I think common sense has become some kind of weird collective sense. Get enough people to believe that shooting yourself in the foot would help doctors and ammo retailers is a good thing for the economy.
Yeah, I mean, it's true. Who is it that, I can't remember whether it was Hitler or whoever made the comment, you tell people something enough, often enough, it'll become truth. You tell people a lie. If you tell people a lie often enough, over time, it'll become the truth. And we've seen that. I mean, boy, I don't want to point fingers. I really do, but I won't. I mean, you take a look at this thing. Here's a guy who points out fake news. It's exactly what it is. It's the first time in my life where most of the time the news has tried to be non-partial. It hasn't tried to be non-partial this time. And is that a clue for anybody with a double-digit IQ, you know, upper double-digit IQ? You don't have to be very bright. I'd say, hey, the news is overwhelmingly in favor of one candidate and overwhelmingly against the other. I said, doesn't that tell you something? I said, isn't the news going to be controlled by the deep state or the elite or whatever you want to call them? And you're going to rush and be on their side? Yes, of course we are. I said, you know, look at King George and the birth of our nation. Most people didn't come to America. Most of them stayed with the king and enjoyed their taxation, right?
That's right.
You know,
That's right.
I mean, it was the goofy, crazy people that ran off to America. And once again, Look at the goofy, crazy people want this thing called the Constitution when we could have socialism, for crying out loud. Isn't anybody paying attention? It's just unbelievable. I mean, the depth of embracing stupidity is just off the charts. Here's a big picture thing again that I've shown before, but this is a semi-log chart. Otherwise, you wouldn't even see this. This would just look like a blip. But this is a 90% correction from 1929 to 32. This is a top to top, which is 44 years, 1929 to 1973. 44 years on 73 brings you out to 2017. Years ending in 7 are pretty bad. There's 37. You got a pretty good correction there. And right along, there's 87, there's 2007, now we're in 2017. We're in the second longest bull market in history, and what we really ought to be seeing, and again, by the way, every 40 years or so, something bad happens. So here you start the new game over in 1932, and 40 years from the economic low of 1933 brings you to 1973, and what do we have? Doesn't look like much here, but this was a serious, deep recession, the deepest recession since the Great Depression, and one that lasted well into the 80s. In other words, here's where you were in 73, and you don't get out of here, you don't recover this till 10 years later. You know, you're mired in this mess for a decade. So then you get another move like this, which, interesting, looks just kind of like this, doesn't it? Here's a move from here to here, and here's a move from here to here, and then you get into this type of thing. On this move here, you run up and you get into this up and down type of thing. There's your first correction, up, down, up into D. Here you go, first correction, up, down, up into D, and I mean, it's following this about as nicely as you can follow something, and this is what should follow. And it's every 80 years of depression, every 40 years of deep recession. So, that's certainly something to be concerned about. This is something to probably be concerned about. Whether this is the ultimate top or not, I don't know. But now we've moved up to the top of that channel, so I know what the risk is. I know that the risk is certainly a lot greater here than it is down at the bottom of the channel, down here or down here. So anyhow, those are some of the things. Let's see, did I get them all? I think I did. I only had 4 of them for you, but they're pretty big picture.
Yeah, they are.
It's
good
pretty
stuff,
big
man.
picture stuff,
Good
and
stuff.
I'll try to, next time I come on with you, get maybe a little bit more specific and some we'll do more specifics. Right? This, I just figured this was kind of time for at least another big picture look.
No, this was good. I really appreciate you popping on. Thanks so much, and glad you're doing well. And I know you're going to stay busy, but as soon as you have a chance, let me know, and we'd love to have you back on again.
Yeah, thanks. I missed you guys and your audience. It's always fun. So anyway, great to be back. You have you and all your listeners have a wonderful weekend.
All right, brother. You do the same. We'll talk to you real soon.
Great. Thanks, Dwayne.
All right. Bye-bye. Okay. Where did we leave off? Apple is officially killing the iPod Nano and the iPod Shuffle. The company refreshed its iPod lineup on yesterday, and cut out the only 2 models that don't run on the iOS operating system. Amazon CEO Jeff Bezos officially became the richest person on the planet, surpassing Bill Gates. His personal net worth is now estimated to be around $90 billion. Twitter's report for its second quarter earnings mentioned that the company added 0 new users over the last 3 months, and the stock fell 10% as a result. The company managed to beat Wall Street expectations in terms of revenue. However, with $550 74 million versus an expected 537 million. The state of Wisconsin has offered Taiwanese manufacturer Foxconn about $3 billion in subsidies to build a factory there. The company itself plans to add another $10 billion on top of that taxpayers' money. The aim to create 13,000 new jobs. Amazon plans to keep its Amazon Fresh and Amazon Go services after it completes the $13.7 billion acquisition of Whole Foods. The company still wants to experiment and offer its customers a number of choices to figure out the best way to shop for groceries, as it believes there is no one solution. Google is buying a number of properties in Silicon Valley with an overall expenditure of about $820 million. The company said that it now has more than 72,000 employees and is looking to expand in the Sunnyvale, California area to branch out from its main Mountain View campus. Dropbox, which has been around for quite a few years, is getting closer to its initial public offering and is working with Goldman Sachs on the papers to bring it on as a lead advisor. The file hosting service was last valued in 2014 at $10 billion. HPE CEO Megan Whitman publicly pulled herself out of the list of potential Uber CEO replacements, shooting down speculation that has emerged in recent days. The businesswoman reinstated her commitments towards HPE, claiming that she is not going anywhere. And last, Facebook has unveiled version 2.1 of its Messenger app, which now includes support for built-in natural language processing, NLP, as well as a payment software development kit. In chats between customers and brands or businesses, the NLP tool will automatically detect the context of a message and pass it along to a bot, which in turn will give the end user tailored automatic responses. Here come the machines. Oh yeah. All right. Real quick, let's take a run through these. On the S&P 500 last night, the email said to consider selling 2466. We had a 3 3/4 point drop down to the weekly trading zone. Back above the trigger, 4.5 point drop. Back above the trigger, 4.5 point drop. Back above the trigger. The question is do we get another drop? Zone to 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 zone, and looks like we're going to make it back up to the zone. No trigger on the long side. Dow did not fare so well. It's just now approaching its long trigger. And on this short trigger last night, your stop would have needed to be way up here. So I don't think that's a trade you wanted to be involved in. Soybeans, we said to consider buying 1010 when we sent the email out. We ran up 9 3/4 points at $50 per point. Soybeans pay exactly the same as the S&P, $12.50 per tick, 4 ticks to a point, $50 per point. Bonds, consider buying 153.02. We ran up 5 points, ticks at 31.25 per tick. There's 32 ticks to a point at 31.25 per tick. It's $1,000 per point. No short trigger on the bonds. Moving on to crude oil. Consider buying 49.30. Market ran up $480 per contract. And after that, what do we have? Gold? I don't think we looked at gold yet. Let's take a look at that. Okay. On gold, the email says consider buying 1266. There's no trigger on the short side, but buying 1266. See here on the 30-minute chart, too much risk here, okay? Then his price came back and put in a swing low here, just perfect. The 1269.80. It's $380 per contract available. Okay. And then last but not least would be the Russell. And what did the Russell do? The Russell did not do much. The Russell rolled sideways. Consider buying 1439. We got no trigger there. And if we sold 1424, we got no trigger. Swing low here was 1424.10. No trigger on the Russell. Okay, well that's gonna cover it all from stem to stern. And the S&P is still sitting quietly here just below that weekly trading zone at 2469/70. All right, if you want to take advantage of next week's trial, go to apply.cfrn.net, name, email address. You'll get an instant email that has the link and the password for next week. You'll then, shortly thereafter, get a lengthy email that has all the instructions you need to get your platform and indicators and everything else ready for Monday morning. Again, the address is apply.cfrn.net. No credit card required, no obligation. Come, spend a couple days, watch us trade in live markets, real time. Ask all the questions you want. Sign up for a one-on-one mentoring session. And then by the end of next week, when your 5 days is up, you'll be in a position to make a well-informed decision as to whether or not what we have to offer is right for you. So look forward to seeing you next week in the live training room. It is the weekend, so by all means, do spend some quality time with your family. Of course, I'll see you all in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.